Right, so we took this loss this morning. We actually took two losses this morning. The first initial trade that I took, it was a short. It ended up being correct, right? You can see that I didn't get stopped out. I actually closed the short and then I decided to buy. Why? I got nervous and emotional because price was basically retracing to the upside, putting in a continuation to the downside. And because I saw price trading up and I saw my account balance in a negative, I started getting emotional and then I took a trade in the opposite direction. And then what happened after that? Once I took the trade in the opposite direction, I also ended up over leveraging because of the money that I lost here when I closed this trade, meaning that not only did I overtrade, losing more money, I also lost even more money because I overtraded and I over leveraged. So that was amazing. I was honestly very undisciplined and very pathetic on my end, to be honest. So let me just take you through why I took the short, right? So basically, my model, if I am looking for shorts, right? I want to see a sweep of buy side liquidity and then I want to see reversal signatures so that I can take a short to the lows. Reversal signatures like a bullish FEG getting inversed, right? And if I want to take a buy, I want to see sell side liquidity get swept, and then I want to see reversal signatures to the upside like a bearish FEG getting inversed, and then my target would be the highs, right? Basic stuff. So basically here, price opened on the 4 hour at 7 a.m., right? A new candle opened, a new 4 hour candle opened at 7 a.m. And then you can see that immediately when the 4 hour candle opened, you can see immediately when the 4 hour candle opened, it basically went into the 15-minute bearish FEG, it traded into the 15-minute bearish FEG, and then it swept the lows. So obviously, if I want to take a sell trade, I want to see um, displacement below the lows so I can take the trade, right? However, it only swept the lows. So as soon as it swept the lows, I was like, okay, it swept lows. I'm going to be looking for buys, right? So you can see that this is one of my models. This is a buy model B setup or a bullish model B setup. This is basically when price leaves behind a swing in order to tap into a bearish FEG, and then that bearish FEG fails to displace below the swing, and instead it only sweeps the lows, right? So that's basically the buy model B setup. So price leaves behind a swing in order to tap into that bearish FEG. The FEG, however, fails to displace lower, only sweeping the lows and then returning to the upside, right? However, I don't just take the trade once it returns to the upside. I take a trade once it inverses the FEG that created the sweep, because the sweep is a failure swing. So once that failure swing then displaces the FEG that created it, or once the failure swing displaces the swing that created it, in other words, this swing here where the mouse is hovering over, then that's when I want to take the trade, right? As you can see here, it did not displace above it, it only swept and then it fell, right? So because I was looking for buys, I wanted to see that this sweep, this failure swing, displace above this high, and in turn also while doing so displacing higher, inversing this 15-minute bearish FEG. So you can see it didn't do that. Instead it just swept and then it continued lower and lower and lower. Then this is where I entered once that sweep then displaced this low. Because why? Because a sweep is also a failure swing. So once that failure swing displaced below the swing that created it, that is when I then entered short. You can see right there. So that is when I entered short. So now also you can see that price basically, it went my way, it almost hit take profit and then it reversed. And why did it reverse? Because actually over here, this area over here, it's a 4 hour bullish FEG, but I took my take profit here by the 50% mark of the 4-hour bullish FEG. So once I saw it basically retracing, I was like, oh, that's the reaction that the bullish 4-hour is giving me. I'm going to get stopped out. And then I basically closed the trade here. I entered long and I added onto my position so I can get the money back that I lost on the short trade from closing too early and not trusting the setup. And as you can see, in turn for breaking those rules, I just ended up losing even more than I was initially comfortable with, right? So you can see that normally when you look at the trades that I take in the past, you'll see that normally I will only take a reversal trade once I get an opposing IFG, right? So if I'm going to take a sell trade, I basically want to see a bullish FEG get inversed, right? If I want to take a buy, I want to see a bearish FEG get inversed. And normally normally when I take the trade, I want to see a reaction out of that FEG before it gets inversed, right? So if I want to sell, like here I sold, I want to see a reaction out of this bullish FEG before I then go short and take the trade. And there's a lot of times when there's no reaction, like you can see here, and then it still plays out regardless, right? But the reason why I look for a reaction out of the FEG that I want to see get inversed is because it basically shows conflict between buying power and selling power, right? It basically shows conflict and it creates contesting swing points, right? And then those contesting swing points normally become resistance or support depending on if you're buying or selling when it finally gets displaced above or below, right? So you can see like here, if price basically ended up doing this, let me show you. So price trades into that bullish FEG, right? And then it does that, meaning that there was buying power coming out of the bullish FEG, and then it does that, closing below, right? This area right here between the failure swing and the swing that basically put in the failure swing, that is basically the swing area, right? So you can see that price actually went down, displaced, and then it returned to that swing area and use it as resistance to put in a bearish continuation swing to continue to the downside. So why did I take this trade if there was no reaction? Because clearly you can see it just inversed the 5-minute completely, but it still worked out. So if you go to the 1-minute, you can see that it basically gave me that reaction, and it gave me two setups actually. It gave me a sell model A setup as well as a sell model B setup, and I'll go through exactly which is which. So obviously at the beginning of the video we went through a buy model B setup, which is when price leaves behind a swing to trade into a bearish FEG. That bearish FEG then fails to displace lower, only sweeping the lows, and then the bearish FEG gets inversed. That is a buy model B setup. And here you can see we basically got a 1-minute sell model A, and we got a 1-minute sell model B. Let's go over the A first. The A is super simple. It's this here. It's this that I showed you here. Super easy. Super easy, right? You can see price traded into that bullish FEG. It put in the reaction. That reaction was too weak to displace higher or even sweep the highs, and then it put in a failure swing, that failure swing displaced below the swing that put in the failure swing, then you would enter short there, target the lows, and then it plays out. That's the most recognizable one that I see in price action. It's very easy to take, super easy to take. Okay, that's basically the 1 minute sell model A, right? 1 minute sell model B, as you can see, price basically left behind a swing over here where my mouse is currently. It left behind a swing in order to tap into this 5-minute FEG. That 5-minute FEG failed to displace higher, only sweeping the highs before falling. But no, it clearly displaced higher than this. You can see it displaced over this higher. No, it didn't, because if you go on higher time frames, like the 5-minute or the 15-minute, then you can see that price only swept the highs. And then obviously, because when FEGs get respected or traded into and gets respected, the swing point that it leaves at those FEGs is normally called protected swings, right? Protected swing points. So basically, you would anticipate that as soon as that protective swing point then gets displaced, you would then short and then target whatever your risk to reward is, whatever you normally target. So yeah, 1 minute sell model A, price swept highs, returned to a bullish FEG, failed to displace higher, and then it left behind a failure swing. That failure swing displaced below the swing that created the failure swing. Entry. That's the trade. Sell model B, 1 minute sell model B, you can see price left behind a swing here because it was bullish. It left behind that swing so it can trade lower, retrace lower, tap into that 5-minute bullish FEG, fails to displace higher. It only sweeps the highs and then falls back into the range. And then you can see that we then get an inverse over here, or you can take the trade once the swing that put in the failure swing then gets displaced below, because a sweep is a failure swing as well. So you can see that basically this is a sell model B setup that goes into a sell model A setup. So it's two setups in one, which is high probability. What's also high probability is when a bullish FEG gets inversed by a bearish FEG, because that means that it is a balanced price range, right? You can see there's the FEG, bearish FEG, balanced price range. Price returns to it. If you entered on this return here, immediately goes your way. So that's high probability. And then same if you take it the other way around. If you want to buy and price inverses a bearish FEG, if price inverses a bearish FEG with a bullish FEG, it leaves behind a balanced price range. Price taps into a balanced price range, and then it goes your way. Yeah, so basically I lost that. That's basically why I lost the trade. I lost the trade because I wasn't confident in my strategy, in my setup, that I've clearly backtested and been profitable on for a countless amount of trades. It's currently the 1st of July. In June, I basically got 17 wins and 4 losses. If I'm correct, that's 21 trades, 17 wins and 4 losses, all on this setup. So that just shows that you need to trust your model. Don't get emotional about it. Just trust your model. And if you lose, you lose. If you win, you win. Because you can see that clearly price can always just either prove you right or price can prove you wrong. You can take that loss as a lesson and come back better. Just like I'm taking this loss as a lesson to trust my model, trust my setup, because I've back tested it a lot of times. I've lost a lot of money and lots of money from back testing and trying to prove the model to work. So that's why if you have a profitable edge, and then you know what, if you have a proven strategy, all you need to do is implement some risk management, and then you're basically profitable. That's all it takes. So obviously I didn't trust the process. I wasn't patient, and you could see I am now minus 2% drawdown on my 5k funded, which is really sad because just last week Friday I was plus 2%. So it's really sad. So yeah, so if you want to take anything away from this trade, trust your setup, follow your rules.